Hey everyone, Ben here. I've received so many questions from you guys asking what will happen with the stock market in 2021. Will we have a major stock market crash? Will we have some corrections? Will the stock market continue on a major bull run? Will we have a bull run of a decade? All these things are possibilities of what could happen in the market. And the simple fact is, nobody knows. Nobody can actually predict the future. However, what we can do is analyze economic indicators in order to understand where we are in the present. And then that will allow us to actually see where we could potentially be in the future. Now, I did a previous video analyzing 10 different market indicators, looking at various parts of the economy to see if the stock market is overvalued, if the stock market is in a bubble, and what is the likelihood of a stock market crash. So I'll leave a link for that video in the description below. In this video, I'm going to take a look at just 3 of those indicators just to give you guys a quick update on the stock market. I'm also going to get into, after, just a bit of a conscious thoughts at the moment I'm having about my own personal portfolio and how I'm adjusting it in 2021. What will be the change in my strategy in 2021? So that's what we're going to get into in this video. If you do find any value, feel free to give it a big thumbs up. That really helps out tremendously with the YouTube AI. If you're new around here and you still haven't subscribed, feel free to join the investing family by hitting that subscribe button and turning that notification bell on. If you do want to access exactly which stocks I'm buying, which stocks I'm selling, live updates about my stocks and portfolio, then feel free to check out that first link in the description below and join the VIP membership group. We have a thriving community now, and it's really a great place to be if you truly want to be successful in investing. And that being said, let's dive in. So first indicator we're going to take a look at, guys, is the Buffett Indicator. And now this was coined by the famous Warren Buffett. So basically the Buffett Indicator takes the total market cap, I believe it's the Wilshire 5000, and then takes that over the GDP of the US, so the gross domestic product of the US. So it basically does a comparison between the total stock price and the actual output of the US economy. And at the moment, that is classed as significantly overvalued according to the Buffett Indicator. Based on the historical ratio of the total market cap over GDP, it's currently at 194.9% of GDP. Now, that is quite high, and you may be worried, you may be saying, Ben, doesn't that mean the stock market is truly overvalued and we all need to sell our stocks now and panic? Well, not exactly, because we need to put this into perspective.
Just calm down.
I am calm, I just want my headset.
First of all, we need to look at the general market right now. So it's looking at the market prices and the general market. But really, we do know that the market is weighted towards certain stocks and certain sectors. For example, take a look at the S&P 500. Around 25% of the S&P 500 is made up of large tech companies. We've got Amazon, we've got Google, we've got Tesla now. These make up a large percent of that index. Thus, if you look at the valuation of the index, you may say, oh, that's overvalued. But really, there are a lot of undervalued companies in that index, and then a few really heavily overvalued companies in the index, and that basically skews the results. But some of those really overvalued companies might be overvalued for a reason. For example, the tech companies. We need tech in our everyday lives. You're watching me right now on YouTube, which is owned by Google. Thus, shouldn't Google be at a higher valuation than a standard company with no competitive advantage or moat? So that's the first factor you need to take into account. The second thing is we're in a low interest rate environment. And basically what that means, people will be taking more risk in the stock market because the stock market is the only game in town. What else are you going to do with your cash? Are you going to put it in the bank and earn 0.0001% interest? Are you going to put it in bonds and earn literally nothing on your interest again? There's only so many things you can do with the capital that you have. Thus, this income has to flow into the stock market. That's just a fact of life. And that's why we're seeing the stock market on a substantial rally. If you look at a historical chart of interest rates versus stock market prices, you will see when interest rates are high, the stock market tends to suffer. And when interest rates are low, the stock market tends to boom. Thus, the low interest environment that we are in right now is actually good for the stock market. And also practically it's good for business. Because if interest rates are low, this basically means the credit window for companies is very large. So companies can easily access capital. They can borrow money very easily in order to expand, survive, and grow their businesses. So this is all positive for business and thus positive for the economy and positive for the stock market. Also, we need to realize the stock market is not predicting what's happening now. The stock market is forward looking. So investors such as you and me are psychologically looking at the stock market, and we're not looking at what's happening today. We're looking at what's happening in the future. This is why during 2020, everybody was saying the economy is disconnected from the stock market. The economy is suffering in many countries, many parts of the world, yet the stock market is hitting all-time highs. Why the disconnect? Well, the fact is people were looking forward. They were looking past this whole global issue. They were looking past that and saying, after all this is over, the economy will be better and it will recover. Now, sometimes people are over optimistic, sometimes people are right, sometimes the crowd is right, sometimes the crowd is wrong. But that's the simple fact of why the stock market was hitting all-time highs, even though the economy was suffering. Will that continue happening and go on forever? Nobody knows. Will there be lots of stock market corrections down 10%, 20%, 30% in the future? Definitely, that's just part of the market. And I personally think there will be a few corrections this year, but I don't think there'll be a major market crash. Now, anything can happen. There could be a major market crash. I'm going to get into risks a little bit later in this video, but let's dive into a few more indicators and we'll go into a few more details now. But the second indicator a lot of people tend to look at is the Shiller PE ratio. So the price to earnings ratio, but this is cyclically adjusted. So currently we're at 35.71. So that means on average, the stock market, you're paying 35 times a company's earnings. That's the company's profits. Now, previously, during the dot-com bubble, this was around 45. So we're not at those exuberant highs yet. That was really the worst bubble we've seen almost ever. So if it gets to this level around 45, then really we should be worried. We should definitely be asking the reasons why it's at those levels, potentially trimming our positions, potentially selling some stocks, potentially moving into more safer assets, gold, moving into more recession-proof companies. So we need to ask those questions once we're at the sort of 45 level here. The moment we're at 35, it's still high, don't get me wrong. This is the second highest it's ever been in the past many, many years. So it's even higher than Black Tuesday back in the 1930s. That was the Great Depression. It's higher than Black Monday back in the 1980s. So yeah, it's just one of those things. We need to keep our eye on it. But as I mentioned previously, I think the reason it's at these highs is we're in a low interest environment. We've had stimulus from many central banks from around the world. We've had money pumped into the economy, pumped into the system. We've had zombie companies literally brought back from the dead and kept alive. Thus, why shouldn't the stock market be booming? Because it's effectively supported by government. Now, the government does have a risk in itself, and that is the fact that government debt is at an all-time high. Now, I previously did a few videos on this, and I mentioned a few ways in order to protect yourself from this government debt. Ray Dalio, the famous billionaire hedge fund manager, thinks we're coming to the end of the long-term debt cycle. So that could be a major issue. Also, there could be a real catastrophe in many countries across the world. But there are a few ways to protect ourselves because I'm a problem solver. I'm not a scaremonger on this channel. I see that so much on mainstream media, on news, on big channels. I see all this about, oh, let's scare everyone, economy, stock market's going to crash. No, on this channel, I'm going to provide solutions. Now, solutions are hard, and nobody likes solutions because it's easier just to talk about the problem than to actually come up with solutions. But in this channel, I try to provide the solutions as best I can, of course. So if you appreciate that, please give this video a big thumbs up. Next is the VIX indicator. So this is the volatility index. So this just measures volatility in the market. So volatility is basically how much stocks move up and down. So during periods of high volatility, such as a stock market crash, the VIX indicator spikes. So if we go back here, we can see here, VIX was fine, VIX was fine, VIX was fine. Boom, big spike. What was that? Well, this big spike was the 2008 financial crisis. However, this seems like a crisis, but in Chinese, the word crisis is made up of two parts. One represents danger, the other represents opportunity. So actually, the 2008 financial crisis was one of the best times to invest in the stock market and even in real estate. So be greedy when others are fearful and fearful when others are greedy, in the words of the great Warren Buffett. In the words of Hal Marks, most of the time, the world doesn't end during one of these major crises or crashes. However, if it did end, you'll probably have bigger things to worry about. If aliens came down, if there was a nuclear war, you'll probably have bigger things to worry about. Your money's not safe anywhere. If it's in the bank, if it's in the stock market, if it's in gold, you probably won't be safe in any scenario if the world did end, because the world's going to end. but most of the time the world doesn't end, so you guys can sleep well at night and relax.
Okay, just calm down.
I am calm. I just want my head set.
This is just a really interesting indicator to watch, and I highly recommend you keep your eye on this, because if you did keep your eye on this, you would have seen in 2020, during this time, you would have seen the VIX sort of spiking up quite high. And then by 16th of March, which was the bottom of the crash in March 2020, which was also the best time to buy in 2020 because stocks were on a discount, then the VIX spiked then also. Now, if I take myself back mentally to that period here, I remember hearing about all this health crisis news at this point. I actually observed some information regarding hedge funds and how the smart money was moving during these times, and the smart money was moving into safe instruments. The yield curve, which is something else you guys can check up, the yield curve was actually inverted. If you want to find out more about the yield curve, I cover that in my stock market overvalue video, but the yield curve was inverted. I noticed that I sold all my stocks. Now, this is no BS. I sold all my stocks. I didn't have any stocks in the market during this time here. I sold everything. And I was just concerned about the situation. I didn't know the stock market was going to crash, but I was just concerned, and I thought, okay, I'm going to sell everything. Sold everything. Stock market crashed here, and then I bought back in heavy. I loaded up the truck. Admittedly, I didn't have as much knowledge about the market that I do now. I've built up a lot more knowledge this past year and a half. But if I did have the knowledge that I have now, I would have made probably 5x what I did make, but I still made a lot in a very, very safe. I took minimal risk, and I still made a decent amount on that. And I know many of you guys did who watched my earlier videos on this channel. They weren't very well produced videos, but you guys will know that I selected some great stocks during those times. So that was sort of a crazy time and a great time to invest. These little spikes is what we need to watch out for. So I'll show you another one here. This one, October. This was the tech sell-off reversal. So when the V-shots were announced, the vaccines for this whole issue, many people retreated from these tech stocks, these stay-at-home stocks, Amazon, Google, Peloton, many of these sort of stocks, retreated from them and then into more cyclical stocks, the travel stocks, the home building stocks, etc., during the sort of vaccine announcement. So that's what happened during those periods there. But it's just interesting to watch. And at the moment, it's completely flat. So really that means the market's not volatile. It's not dangerous at the moment, but it's just interesting to watch. There was a spike a few weeks back. This was GameStop. So this spike here, this was GameStop. This was crypto. This was all those that were booming, but mostly GameStop and AMC and all the Reddit stocks. I covered those on previous videos. So that caused that volatility there in the market, but definitely very interesting to watch. This really does give you an overview of what's going on in the market. So now let's go over to my investing strategy for 2021, very, very briefly. So firstly, I think it's great to remind yourself of your investing goals. Why are you investing into the stock market? Is it to be financially free? Do you just like the fun side of investing? Thus you prefer the speculative high risk investments because that's the fun part of your portfolio? Are you investing for retirement? Are you investing to become rich, 10x your money and retire in the next 2 years? Everybody's got a different investing goal. So what you need to do is categorize what your investing goal is. It could simply to be, I want to invest up to this stage in order to buy something really nice, improve your quality of life, in order to buy a property, whatever else it may be. There are many reasons to invest in the stock market. Either way, I think investing is not just something you do for a period and then you stop like a diet. It's basically like a lifestyle. And that's the only way of being successful in the market. So remind yourself of the investing goals. It's okay to have multiple goals. Like my personal goal is financial freedom. But I also like the ability to have fun in the market. I have a little small speculative part of my portfolio, which I may put into more high risk, high reward bets. But that's not impacting the rest of my portfolio, which is in, I'd say, more safer stocks, more stocks that I've researched in detail. So you have different parts of your portfolio, split it as necessary, weigh each position up as necessary for what you're trying to achieve. You can still invest in penny stocks, but you're not going to put your life savings into them unless you're completely crazy. But yeah, it's your money, it's your risk. This is not financial advice. Next, assess the risk allocation for each stock in your portfolio. So have a look through your portfolio. remind yourself why you purchased each stock. Did you buy it for this reason, this reason, this reason? Did you buy it off a gut feeling? Did you buy it because you read it in a comments on one of my YouTube videos? Why did you buy that specific stock? Analyze it, assess where the stock is at this current time. Is the fundamentals of the business good at the moment? Are the technicals good at the moment if you're into technicals, if you're into trading? Why did you buy that stock? How large is the position in that stock? What's the gain? What's the loss on that stock at the moment? For example, you might have invested into a stock. It might be up 300, 400%, like a couple I've mentioned on this channel, Etsy, Tesla. There's a small cap one I've mentioned, which is up massively in my own personal portfolio, and many of you guys who invested into that stock. So these are massively sort of gaining stocks. But for example, if you have a large position in one of these stocks, you may want to trim your position slightly. But if you only have a small position, you might just want to let it ride because these are great companies to potentially invest into. Do you have 10 stocks all in EV companies? Or do you have some in EV, some home building stocks, some cyclical stocks, some travel stocks? Do you have a variety of stocks in a variety of different industries? In the words of the great Ray Dalio, he talks about the Holy Grail of investing, which is basically 12 uncorrelated streams of income. So 12 stocks at least that are uncorrelated, so they're not related in any way. So you can have an electric vehicle company, and let's say an e-commerce company, and let's say a home building company, and let's say a mining company, all in the same portfolio, but not all in the same industry. So assess your risk, assess where you are in that industry. So this is my prediction for 2021. I predict a major bull run rebound. So I predict travel to explode. I predict consumerism to explode. I predict the green energy market to explode, electric vehicles to explode. I predict all this to improve in the market. But also I do predict a few market corrections that are going to happen. I think the whole SPAC situation, there's been a lot of SPACs recently. I think that will start to fizzle out slightly. I think there'll start to be not as many opportunities in that market, and that'll be reflected by the videos on this channel. But like all videos, I will only be recording the very best companies on this channel, and hopefully the best ones to invest into. Here's a quote by Boris Johnson, the British Prime Minister, which sort of sums up what I'm saying. It's basically build back greener. I feel like there's a real push towards green energy, and really people want to build back greener after all this madness has been going on in 2020. So I also predict a low interest rate environment, and that is good news for the stock market. It's good news for borrowing. It's good news for mortgages if you're looking into property. So the risks of what I think could happen in 2021. So first, we could have resurgence of the global issue. I did see some reports recently that the vaccine doesn't work on certain strains of the new sort of V. We can't say the word on YouTube because of the algorithm. If this whole thing continues, this whole lockdown, you've got to think about how to pivot your portfolio, which company is going to benefit, probably the stay-at-home stocks. Will the government run out of money in order to keep giving people stimulus? These are all questions you need to ask yourself and pivot your portfolio in the necessary ways. But these are all things that could happen. Another scenario which could happen in 2020 is this just becomes the new normal, and everybody has to wear masks all the time. It's just the new normal. Each and every winter, we have a resurgence of the global issue, and this is just normal. It's a normal part of life. Every winter, we have to lock down, and this could happen for 10 years. Now, that's sort of a middle to bad case scenario, but it could happen, and it's quite likely, and we need to understand how we need to adjust our lives and our portfolios in order to adjust for each and every scenario. I'm also going to try and focus more on high conviction bets. So this may not be as interesting in terms of videos, guys. So let me know if you want more high conviction bets. But maybe I'll be researching this company for months or weeks or years. But then when this opportunity comes, I may load up the truck and put a substantial amount into this company. Now, these are 10x 100 bagger style investments, but it does require a lot of patience in the market. So I'll also continue to track the economic indicators for how healthy the economy is and how well it's doing, and the stock market valuation. So the same way I did in early 2020, I was tracking economic indicators. I saw that the market was seriously overvalued. The yield curve was inverted. There was a few major issues. I sold all my stocks. The market crashed. So I'll still be tracking those indicators on this channel. I'll probably do a video once a month basically on is the stock market overvalued, and I'll cover 10 economic indicators. If you're a returning subscriber, be sure to turn that notification bell on. I know many of you are just subscribed, but if you turn the notification bell on, you'll get notified, especially on videos like that, which I think are seriously important. I hope you guys found this video valuable. Thank you so much for watching. I really do appreciate all the views every time you watch this video and all these videos on this channel. I appreciate the thumbs up you always give. I appreciate the comments below. If you guys want further access to content, including access to my live buys and sell signals, access to my entire investment portfolio, access to me directly, so basically I can talk to you, you can ask me questions about your own personal portfolio, any question on your mind. I know a few years out when I was investing, I first started out, there was nobody you could ask questions to in terms of just simple things like a certain stock or a certain investment, or what should I do, is my portfolio okay? Should I be more in this area? Should I be more that area? What about real estate investments? Like, these are just questions that I'm sure you've got in your mind, and I can answer them for you in the VIP group, no problem, because I can sort of pivot my time a little bit better in there than on YouTube to the sort of general public. But I really do appreciate everybody who watches these videos. I really do appreciate that, guys. So thank you so much for watching, and I'll see you all in my next video. Invest safe.